Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just a short video on the 5-hour work week. So I've mentioned in the last few videos focusing mainly on New York and just emphasizing, though, that anytime we breach a high or low of the week or the month or the day, we potentially may have a trade. So there are trades in Asia, there are trades in London. But if you're only trading New York or the New York hour, especially on indexes, gold, oil, which primarily can be more U.S. market oriented, not necessarily all the time, but again, every instrument will show trades in London. They'll show trades in Asia, even if they're traded mainly in New York. But the purpose of that is to understand my approach, and that is narrowing and being very specific to when I trade. So it's like going to work. If you go to work at a certain time on Monday to Friday, you work your set schedule. My set schedule is focused around that US 12 candle window and primarily the 9:30 New York Open. Sometimes there are trades in the first hour without even getting to the New York Open. Gold often will give trades in the first hour. We see that on oil as well. Indexes, we can have a thesis already having locked in a high or a low, but most cases, 9:30 New York, will see that market either return to an extreme, to a higher low of the day, a high low of a previous session, which is the same as a higher low of a day, for a best trading setup. Now, today we're just going to review yesterday's trades and again emphasize the patterns that show up. 3 sessions, 3 levels, 3 days. It shows up over and over again on any instrument. We'll look at a couple different examples, but we'll review yesterday's trades. Now, coming back to gold and looking at the 15-minute chart, I've got the previous day's highs and lows, the weekly separator. On Friday, we had a market that came down and on payrolls and then into the New York Open, marched back up 3 levels back into the upper level. So again, without putting numbers on here, this is 3 levels of rise, 75 pips approximately from low to high. So again, 3 levels. This anchor point gives traders a reference point heading into the New York Open. I add 75 pips to that, and that gives me my strike zone in terms of the stop hunt, but also the number level for entering into a trade. So after payrolls, we have a trade that many traders took for 50 pips, and that starts the march up back into traders that are short. So again, understanding that 9:30 New York Open is when the equity markets open, and a lot of markets will move around that time. So even though traders may have taken this trade or missed this trade, they think they've missed the trade, traders that have shorted this and maybe held on for more eventually get stopped out at break even. We get 3 levels of rise back to our strike zone price above or at or best fill as close to 50. Our market is already broken down. Okay, our market is already broken down. So these are the things that I'm emphasizing to traders to start to study and understand. We have a market that breaks the weekly high. We may not know that this is locked in, though, until we get both Asia and London having traded, because now we have a low and we have a high. We've also broken the high of the previous day, the high of the week, and we have trapped volume up high. Trapped volume in this upper 25 pip boxes. We can draw higher lows of where the market, these bear bull combinations are peak formations. This locks in the low. So this is an area of significance in our 3-hour London high low where we break out, pull back into the gap. Payrolls auctions lower, which is a stop hunt on U.S. session traders from Thursday, before starting to march back up 3 levels into the New York Open. And this is what gives me a thesis now for a short trade and a measured move of 1 full expansion of that range, which if it's 3 levels of rise, that's 150 pips for an extension, a measured move extension. So again, understanding the setups. I'm looking for setups. So in a day where we're reversing, I need information to lock in that thesis. I can't just take a swing and hope that I'm trading that in a down move. I'm waiting for the session timings to kick in. Once I get this into the U.S. session, this has a high probability of not only following through, but that is the move for the day, because now we've got Asia, London, and New York on board. The same thesis applies the next day. We have a breakout trade now from Friday's U.S. session. Remember three things that markets do. They break out, they pull back, and they continue. They break out marginal new high or marginal new low, and they fail for a reversal, which is essentially what we've seen at the high of the week, a false break reversal. And we have markets that go into a trading range, which essentially is what we get with Asia and London during the day before the U.S. session comes on board. So again, these are templates. These are templates. This is a high. We have a high and a low. There's our box. We get our first 15-minute stop hunt. There's our pin. We can go to our smaller time frame. There's our first hour high and low. New York comes on board. And we have a low-hanging fruit trade for the continuation short back through not only the low of the day, but a measured move expansion of our first hour high and low. So these are the types of setups that I have playbooked in my playbook. So I'm looking for setups, 3 sessions. It might be a U.S. session low and a Asia-London high. There's our low, there's our high. We have a smaller pattern within a pattern. On the day itself, we get a stop hunt high into the breakdown of that U.S. session move on Friday for a measured move short. These same principles apply each and every day. We get a high, we get a low. They can work one side. We can get a squeeze. We can get a session trade. Now, if I'm not at the screen and I only come for New York, the market has broken out. I'm looking for stop hunt low for the continuation long. This is coming out of Thursday's reversal. We're tracking this back to the high of the week. Again, we talked about this on oil. Day 1, day 2, day 3. The break in structure, consolidation, and the continuation back to the high of the week. NASDAQ and S&P, again, markets that behave very strongly around 9:30 New York time. I don't care if it's daylight savings. I don't care if it's winter time. It's New York time. That's what time I work on. Friday's U.S. session high. We have 3 sessions of rise coming out of a squeeze into the low of Friday night. We have a pattern within a pattern. We have our rectangle down low. The market begins its march back up. Break in structure, higher highs. There's our first level. Asia, London, New York. They go vertical into the high of Friday's U.S. session pin from payrolls. And again, understanding the importance of the pattern. This first break long gets traders inside of the high of Friday, trapped long. Shorts who took this first break, there's a 50 pip trade down. That's our break in structure. Now we get our pump and dump. Stop hunt to the high of Friday and an engulfment of the high bull candle. The high bull, so 3 levels of rise. We're in the upper quarter in a 100 pip box after stops have been hit. There's our pin. There's our trapped volume in the upper quarter. They spend an hour working the high. That first move out of the box is our high. That's our high. They hit the stops on Friday and they lock in the high, drop it down, and in the end of the 12 candle window, we get a squeeze for a vertical move and then the continuation of the measured move down. This is a textbook playbook setup. 3 levels of rise back to the high of the day. People have said to me, but that's not the high of the day. Actually, that is the high of the day. That's the high of the day for the U.S. session. So this line is the same as this line, except this line occurred at the high of the day on Thursday. They went up to that level. This is the session high, which is our new high of the day heading into Monday. If they had gone through that back towards the high of the week, absolutely. But where did our 3 levels take us up to? The high of the Friday U.S. session, the pin on payrolls, and then the measured move back down. Escalator up, 3 levels, hit the stops, elevator down. Exact same pattern on S&P. We have our lower high, and you'll notice on the S&P difference to the NASDAQ is that we have our lower high in the gap. They pin up into the lower high on payrolls. So again, all I look for is, okay, this area, what number level are we at? The high of that pin is at 61.1. That's 611 to me. So I'm looking at maybe at 6 1/4. 6 1/4. I'll put those levels on my chart. We get our vertical pump and dump setup from inside. Remember, I'm not trading in here. I'm looking to trade once we go to the outside, the blue tracer. We hit the high of Friday's U.S. session. We get our first hour, makes a high. The first hour puts in a high and a low. They break through the high, hit the stops, and I'm looking for the high to get locked in. Notice the difference. People say, well, why wouldn't you go long? Okay, let's say you got long inside of this consolidation or on the breakout candle. Do you notice how they lift the offer, getting you to buy high? When you're buying high, you're in the move from the inside. That's not a squeeze going vertical. The squeeze would come out of the low. It would be inside of the low here somewhere. This is a buy setup where they're getting you to chase price because the real trade is coming from up top. Notice how you can sell high, you can sell the breakout candle, and you're still up high. You're still up high. They move it up. They trap volume. No, this isn't the volume of each bar. This is people being caught long on longer time frames, buying high, chasing the move, thinking this is going long, and they pull the bids, drop the floor out, measured move back through towards not only the low of the session but the low of the day. So again, on oil, a different variation. Right off the bat, we had a trigger of the high of the week in the Asian session for a nice vertical 100 pip move. But over the course of the day, the market auctions back down to the breakout of Friday's long trade. So prior to that, we have a low of the day in place, but we also have higher lows from where the market continued its move on Friday night. They break the low, and there's the beginning of our 3 levels of rise. They've already locked in the lower high of the day. So again, coming back to understanding, they put in a peak formation stop hunt. They've locked in the high at the previous day and the high of the week. We auction lower. They auction back up into the high of the Europe-London window. They come down and take out the lower low of Friday's last level of rise. This area where the pin hammer is becomes an area for me to identify. First thing I do is add 75 pips to the low. That gives me an idea roughly of 3 levels. It might be 150. I will know by the timings of when this reaches this level. The high of that candle is 119.63 on this particular platform for West Texas. When we go to our 1-minute chart, we can see the lower highs, our M formation. This is at 75. We get our 3 levels of rise. They lock it in, and the short trade back down to the low of the session, the pullback, and the continuation through the low. In a situation like this, I am happy based on the time. A great question I got from a trader was they were up 40 pips. They got stopped out of break even. When I'm in a trade that's profitable, if my target was down at the low of the day and we go into consolidation, when I get to the end of a 15-minute rotation or a new hour and we've got pins hitting the low of this breakout, I am happy to lock this in. I don't worry about getting the extra 10 pips, 15 pips, whatever it is. You get a vertical move, you can or take the bulk of the trade off and leave a trailer in, locking in maybe 50% of profits, whatever that may be. It's your decision at your discretion, or just exit the trade completely, be done in that hour. The point I'm trying to emphasize today is that you can come to the screen with a set work schedule. If you're only trading London, that doesn't mean that you need to trade every instrument, one instrument every day at London. I'm looking for setups, whether it's the Swiss franc, it could be the British pound, it doesn't matter. They will all demonstrate opportunities We see a London trade on Friday on the Swiss franc. We see a U.S. session trade on Monday on the Swiss franc. We can see days where there are trades in London. 3 sessions again, U.S., Asia, London. The consolidation, the blow-off on level 3 on U.S. news on the Wednesday. The double top, the M formation. When we come into the new day, the same principles apply to me. Is the higher low locked in? If I'm only trading London, I'm looking for the opportunities that give me a sell high opportunity. I want to know there's trap volume in the trade. I want to know that there's the potential for a market to go vertical back to the previous levels low. Remember, where is the money? First place I start is at the high and the lows. Then I'm looking at the pattern of the trend. Each 3-hour window can become a new level, previous session high or low, because that is the high of the US, that is the high of the Europe London Open, that is the low of the London window. If they go lower, the low may not be in place yet. We're at the low of the week, we're at the London session, we have US, Asia, London, reversal, and you'll notice that that low translates back across to the low of Tuesday, the breakout level low, which was the low of the week. So there are opportunities in every session. We can get 3 sessions, again very similar, Asia, London, New York, sell high setup. Each instrument depending on its volatility. Obviously, NASDAQ, S&P, gold, oil, the volatility is going to be greater than the Swiss franc, but the Swiss franc can still offer some fantastic 3-session, 3-day setups for vertical moves. And so I encourage traders to not, again, get caught into trying to trade moves all the time, but looking for specific setups where you have the opportunity to position yourself for asymmetrical risk reward and that they're scalable and reproducible types of setups. Over the course of the day, information shapes your geometrical shape now for a classical charting type setup for a measured move type of opportunity. This whole box becomes consolidation for a geometrical breakout. So hopefully that makes sense. 5-hour work week. You can make it as simple as complicated as you want. People have said to me, you can't do that. You can't do that. Well, that's all I'm doing. And to me, that is for me, the smartest way to trade, the highest probability and profitable way to trade, and the least amount of stress and simple. So I'm looking for simple setups. If I don't see them, I come back the next day because I know 90% of the time there's going to be one really solid trade minimum on one of these pairs. So we're going to get some big moves. We've already started the week off with some fantastic moves. Not a lot of news on the calendar. Aussie dollar's got a rate announcement. There's a few other on the calendar. Keep it simple, traders. Maximize your opportunities, focused on your best setups, and may the markets go with you.